that one now. Okay. So, um, Shelly, thank you so much for jumping on. This is The Real Tea with Lisa, my new YouTube channel that I started. So, we are working out the kinks, but I want to go ahead and I know we want to talk. I talked to you briefly about a few of your products, but I want to learn a little bit first about how you kind of got started in the mortgage industry.
Well, Lisa, thanks for having me this morning. I truly appreciate it. And just to give you a brief rundown, I've been in the mortgage industry going on almost 15 years. And I actually started my career as wanting to be an educator. And then I was more like towards health and wellness. And then my sister actually was a bank manager and started in the mortgage industry. And she's like, I think you would do really great at this. And I started and had been a stay-at-home mom for a couple years right before I
Hmm.
started. So I was kind of like out of the gate, didn't know much about it, was able to pass my test on the first time. And I was like, yeah, this is awesome. And ever since then, feel like I'm still doing those kind of roles, but in a different way. Because I definitely get to educate all my clients. And so they're like, I know you don't want to talk about this. I'm like, no, I do want to talk about this. This is what I'm here for, to educate you and teach you what's out there for you and how we can benefit you in the future and things of that nature. So I really feel like it's kind of went full circle. And
Hmm.
that's why I really enjoy doing what I do.
Okay, absolutely. And a lot of people don't know too much about mortgages and the whole industry of how to get started. They have an assumption on what they read out there on YouTube or Google and stuff like that, or from family and friends. But other than that, they don't know. And so that's one reason why I'm having a panel coming up this weekend, just to kind of educate a few people about it. We have them a little every now and then, but not too much. But tell me a little bit about like some of your products that can probably fit. Well, no, let me back up. When you actually meet customers or they come in and sit in the office or talk to you or they get on the phone, what do you feel is like their biggest challenge that they tend to have when it comes to the home buying
Well,
process?
I think, like you said, they have a lot of knowledge or they've received knowledge from the internet. They receive knowledge from their family and friends that haven't bought probably a house in 15 years. So, some things that I see that I hear about right off the bat is like, you have to have perfect credit. You don't have to have perfect credit, and those are
Okay.
things and if you are below our credit score requirements, then that's something I will help you get to. I can tell you exactly what's on your credit report that we can help increase your credit score as quickly as possible. Another thing that I feel like I hear a lot is, do I have to have 20% down?
Hmm.
You don't have to have 20% down. That's definitely old school
It
way
is,
of doing
yeah.
mortgages. My parents, they had to have 20% down, that kind of thing. But, we have low down payment to no down payment programs. I have quite a few of them actually. And they just don't know that they can be ready now to purchase because they're all like, oh, well, I'm just want to see where I'm at. I'm like, you're ready. Let's get you going. And so
I
I feel like
know.
that's one of the conceptions about it. They don't understand because of what people have told them.
Right.
Um, Another one, yeah, so that's what I find. Also, one other thing is like, when I was buying my house, everybody told me to pay off my credit cards and close them out.
Hmm.
No, don't do that now. You pay them down, but you want like $5 on them. So that's reporting each month. But,
Yeah.
and you don't close them out. Shows you have history of credit. So things that, I was even told, you know, 15, 20 years ago is definitely not the way we do things now.
No, it's not. And the
So,
the industry had to change to meet what was kind of shifting and changing, with our market and with our consumers. I think that's
right.
even more important nowadays with everything changing so fast, Shelley, like so fast. And people right now are just really scared to make that first move. Like you mentioned earlier, they're like, well, let me just see. And in my mind, I'm like, you have everything lined up. And then nothing against Dave Ramsey, nothing against him. But I have some people that go through
Yeah.
his class and they almost feel like they have to be perfect in order to make that
Mhm.
next step to home ownership. And that's what hinders a lot of people from moving forward. And you mentioned like you have some payment, some programs where you don't have to have too much of a down payment. What type of products are those?
Okay, well, majority of what majority of lenders offer is going to be like, if you're a veteran, you have a VA loan.
Mm-hmm.
Then there's USDA loans out there if you're in a rural area. Those are 100% financing. And then, depending on what state you're in, there usually is some sort of down payment assistance programs. For Georgia specifically is the Georgia Dream. And so basically you get a grant to help with your down payment. So it's 100% financing, or
Okay.
it can go towards closing costs as well. Then I personally, Union Home Mortgage has an FHA 100% down payment program. So we have a second lien that we use for either 3.5% down or 5%. You can of the purchase price, whichever you choose. So it can go towards the down payment and a little bit towards closing costs. So
Okay.
that's less money that they have to come to the table with. And we see that, that's definitely a great program for first time home buyers. That's what we run into a lot of times is they don't have the down payment ready, or they do have a down payment, but they don't have closing costs. Or, they don't have the best credit score. They don't have
Yeah.
the 800 credit scores or the 750 and above, because normally to have that higher credit score, you already have to have a mortgage because that's one of the three things that normally boost your credit score up is having a mortgage, a car, and a credit card. Those are the
Yeah.
things that keep your credit scores up in the higher numbers. And, for somebody starting out, they're not going to have that. So that's why those programs are very beneficial for our clients.
Okay. I see what we happen to run up against in the as a real estate agent is that when we're working with buyers, a lot of them will have a little bit of a down payment, sometimes none, but then they don't have, like you mentioned, that money for closing costs. And then they want us
Mhm.
to put in an offer that is substantially lower and asking for closing costs, which can kind of not have them to be considered for that particular home.
Mhm.
So you said you have that FHA product that might pair with them pretty good, that can help with that closing
Mhm.
cost. So that wouldn't be something that could hold up a deal, correct? Possibly.
Correct. Hmm.
Okay, okay.
And Georgia Dream too, they allow you to use that money towards closing costs too, as well.
The
So,
Georgia Dream will. Could you pair the Georgia
mhm.
Dream product with one of your FHA products?
Well, it's basically is. It's
Oh,
like we
okay,
pair
okay,
them with their grant with our FHA loan. Yes.
okay. How easy is it for someone, a buyer, to qualify for that Georgia Dream product? Do they have to go
Well,
through something ahead of time before they actually kind of meet with you to go over something?
Georgia Dream goes off the income of the entire household, and they have different brackets for different zip codes. So that's
Hmm.
something that we would look at to see how much money they're bringing in. They do have a minimum credit score of 640.
Okay.
Um, that's one of the things too that we have to make sure that they're above that, and that's something that we can work with. Get them to that number. But with my FHA product that I have, the down payment assistance, we go down to 500. Um,
Oh, okay.
so
500 credit score?
so, yes. But
Wow.
there's a kind of caveat to that is FHA
Okay.
has a rule that anything below 580, they have to have 10% down.
Okay.
That's just FHA's rule. So anything between 500 and 580, they need to have 10% down. But if they do their FHA loan with them in our grant for 5%, then they really just have to come up with 5% down. Um, so if they're in that 580 to 500 credit score, and that's just FHA's rule, it's not our rule,
Hmm.
but we do have a down payment assistance program that we do match with that.
Wow. Okay. That's good to know. A lot of people don't know that and are kind of scared to take that step. I meet customers all the time and talk to them, and I'm like, hey, would you mind if you don't have a loan officer you're working with, would you mind talking to someone so we can get you there? And they are just so hesitant because they're
Hmm.
scared of their credit being ran
Yeah.
and possibly dropping. It's almost like they're scared. They inquire, but they're scared to take that first step. So if I send someone your way and we finally get to the point where they run a credit, are you they're going to take a hard hit, a soft hit? How does that look like for them?
Well, that's a great question. Some people out there do pre-qualifications, and pre-approval is what I normally do. I
Okay.
don't really do a lot of pre-qualifications just because all the realtors that I work with, they want a pre-approval. And the
Mm-hmm.
difference is when somebody goes to a bank or to me to get a pre-qualification, they're going to get a soft pull. It's usually just TransUnion. They
Okay.
don't have to really provide any documentation. They can just tell me how much they make. And that's why I don't like that because I don't feel like that's really, somebody can tell me they make $80,000 a year, but maybe it's commission and they just started and we can't count that. They have to have 2 years average.
Mm-hmm.
So, we have to be very careful about how people are getting paid and they don't understand that there's certain requirements. So I really just say that it's not really that the information on that paper is not really worth what it's on that paper. It's not worth anything, but a
Right.
pre-approval, we do. They provide documentation. They provide 30 days of pay stubs. They provide last 2 years W-2s, bank statements, photo ID. I do pull their credit. It is a hard pull. It's all three bureaus. I have to see all
Okay.
three bureaus because you can have a Discover card on Equifax only, and I don't see it, and you haven't paid it in 3 months. That can be a
Yeah.
problem,
Yeah,
So
absolutely.
that's why you have to have all three bureaus. So for you to be able to see the full picture, I actually go an extra step. I have an underwriting team that just does income only. It's like an income, we call it our income desk, and we submit the file and it's already written by an underwriter so that when we get started going, it doesn't go back in for the income to be reviewed again. We just have that set number. So that's really nice because with this environment today, we see a lot of variable income. Ever since COVID, people
Mm-hmm.
aren't working the standard hours anymore. You see 36, 38, 37, 36. That's considered variable. It's not considered 40 hours, across the board. So what we have to do is we have to gather their last 2 years and average that.
Okay.
And that's what their income is. So that's why, they can say, they can tell me that's why we have to see those pay stubs. And like I said, I like to get it in front of an underwriter because then I know that I'm pretty good at calculating income, but I always like to have their sign off on it so I don't have to go back to them after we
Right.
get under contract.
Right. Right.
I like
As a real
extra
estate
step.
agent, we appreciate that because we at least know we're getting step closer to the closing table and it's not something that's going to be held up on financing because you're doing your due diligence to get what you need from our clients and then we can start moving forward on that. Um,
Yeah.
so for
But
the
I was
pre-approval,
gonna
I'm sorry,
also
go ahead.
No, I'm sorry. I didn't mean to cut you off. I was just going to say that if you send somebody to me, I do feel like a lot of times they are scared, and they are very hesitant. So I have to, reassure them. And one of the things I always like to say is like, if you're, it's like going to the doctor. If you got your arm in a sling, but you think it's broke, but you don't let me look at it, I can't tell you if it's broke or not. So you have to let me look at your credit. You have to let me look at all
Right.
your information so that I can diagnose it and tell you exactly what we're going to do. I always say it might not be right now that you can purchase, but it's not going to be never. Like we just got to
Mm-hmm.
figure out what we got to do to fix you to get to that point. So when I let them know that I'm really there to be like a guide and, help them get to that point, they seem to be a lot more relaxed with the process once we get started.
Okay. Okay. For the pre-approval process, from a real estate point of view, I send someone to you, they get all their documents to you that you requested. How long does that process normally take before we can get the pre-approval letter?
So if I see that it's, 40 hours, no problem, no, anything like that, I can turn around and give it right back to you within an hour of times they give it to. within an hour of when they give me the documentation. That's
Wow.
always my goal. But if it's variable, sometimes I'll be like, can we just send this in? It usually takes about 24 to 48 hours to be reviewed.
Okay.
Just because especially if we're really close to those numbers, like, they want a $300,000 house and they're right, that's their max. Like, I really
Hmm.
would like to have that assurance that we're not going to have any issues with their income. So I always try to send that in. And if they're like self-employed, they usually take about 24 hours just because if they were writing off extra stuff, I just want to always have like a second eyes to review it because I've had a lot of self-employment income and I do really well with it. I like to have that extra security with moving forward just because they change up the tax forms all the time and how they
Right.
write things. And so it's hard to be on every point on that. So I just want to make sure I do a good job.
Okay. Yeah, I get that. That is self-employment can be a little difficult because sometimes with me being self-employed, even though I want to
Right.
save on my taxes, sometimes my income seems a lot lower than it could be. So
Yeah.
how do you work with people, say like myself, that claim that their income is lower, and I know it needs to look right in order to purchase a home. So what would you suggest to someone like me? Probably like Lisa, get your taxes in
I would
order.
probably, well, if you've done it for more than 5 years, we only needed like 1 year tax returns, the most recent year, usually that's what they
Okay.
look at. So if you've been in the business for over 5 years, then, and I can show proof of that, like your licensing and things of that nature, then normally we only have to have 1 year instead of the 2 year average. Also, we have a bank statement loan. So that's what I usually go to
Mhm.
when, I have somebody that's having a lot more income coming in than that they're claiming. And so basically, they give me, either 12 to 24 months of their bank statements, and they do an average of what the income is.
Oh, wow.
And they subtract their own percentage of what they think the write-offs should be for that employment position. So maybe only 50% of it or something like that, because some people write off like 80, 90%, percent
Yes.
of what they make. So that would be the first thing that I would try to see what we could come up with for your income with a bank statement loan.
Okay. Wow. I didn't know they
So
could do that for regular residential property and not like investment or, okay, that's good to know. Okay. So,
actually,
yeah, go ahead.
the deal that we did together, I'm sorry, I didn't mean to cut you off. The deal we did together, that was a bank statement loan.
It was. Okay. All right.
Mhm.
Yay.
Yeah.
That's how I met Shelly, everybody. Yes, yes.
Yes.
It was a lot of back and forth, and then we settled. And finally, I
Yeah.
was like, okay, look, we need to stop doing this. But yeah, Shelly was great. So that's why um, I try to refer everybody to you. Like when we
I
have
thank you
a
for that.
Blessed in Boston group, which is another um, Zoom meeting. I want to get you in on a Tuesday evening. Monica Simpson, I told her about you. She runs that one. And Annette, the person I talked to you about yesterday or sent you information on. No, I didn't send it to you. I sent her
Mhm.
your information. She's another investor
Right.
that possibly she's looking for a DCS or DCR loan. Yeah.
Hmm.
So that
Yes. Hmm.
you can talk about that as well. So yeah, we're going to get you in with those ladies because
I,
they do a
I,
lot
lo-
of real estate investing.
yeah.
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 So
I love
for
that
our invest,
product. It's really
I'm sorry, go
easy.
ahead.
I said it's really easy. I like that. I mean, they don't have to provide a lot of information for it.
Okay.
So I like
Okay.
that.
So for the real estate investors out there, because they will be probably watching this one as well, you have the DCR, the DCDSCR loans. What other type of
Hmm.
financing products do you have for the investors?
Well, I mean, I do have like conventional products, with the 20% conventional down payment. The
Hmm.
DSCR loan is really good because you don't have to, especially if you have multiple investments, that's going to be your best product to go to. Because one thing that you find as an investor, when you start having a lot of different properties, your income with calculations, what we can do can kind of your DTI keeps getting higher and higher sometimes. And so
Hmm.
it's best to do a DSCR loan. So basically how that is set up is it's based off how much the property is renting for. So what we do is an appraiser gives us an estimate on what the property will rent for in that area. So say for instance, you're buying a property for 200,000 and you're putting 50,000 down. So you're doing a $150,000 loan. And with taxes and insurance each month, it's going to be about $1,200 a month. But then when you have that report come back, your rental report, it says it's going to rent for 2,000. So you automatically are making more than the 1,200 a month
Okay.
off the property. And that's what it's based off on. You don't have to provide any of your income documentation. So that is very helpful. And it's like very easy to do, for as a mortgage lender. It's an easy product. It is a non-QM product, so that is sold off because at Union Home Mortgage we do finance and keep most of all of our loan products except for our
Mhm.
non-QM products.
Okay.
So you
Um,
would make your monthly payment to me.
okay. Now, for a lot of the investors that I know and that we're in groups with here in the Augusta, Georgia area, um,
Mhm.
some of them have some short-term rentals. So not all of them are
Mhm.
long-term. Do you guys do you have products that would fit a short-term rental properties? Because the income, I
Well,
guess,
the
is a
way
little different.
Yeah, so we wouldn't be able to base do the DSCR based off a short rental income. It would have to be based off a long period
A
rental.
long
So it
period.
would be based, a yearly lease kind of
Okay.
situation.
Okay.
However they want to use it, that's up to them. We're not going to come back and double check to see if they're just renting it once. If they want to set it up for an Airbnb, that's not going to be an issue.
Okay. 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 Let me see. Trying to think what I'm missing. I did have for your commercial products, I do want to ask this question. Because I had someone reach out to me and they were interested in finding some space for like a warehouse. Are your loans, any commercial loans set for like, are they just like conventional? Because I don't really do commercial a lot, but I come
Yeah, I
across
don't.
people that would ask.
Yeah, I have a commercial person that I re send to people. I don't have any commercial products. All I do is residential,
Okay.
and investment, but I don't do commercial large products like that. But I do have somebody that I refer out to all my clients that does a really good job.
Okay.
So I always do that when, I come across that. And that's how I'll do with all my clients. I don't do land loans either, but I do new construction where we do buy the land and build the
Okay.
property. Um, we don't, you can pick your builder, but we finance the process. And so if I come across somebody and they decide, hey, I'm just going to go get some land, then I will send them somewhere that I know will take really good care of them that does just land. So if I can't help you, I will find somebody that can help you. So that's kind of how I like to do my job.
Okay. Now, being that you brought up the new construction product, I think I mentioned to you briefly that I have someone that is going to build on a
Mhm.
land that they currently have already. And you said, I think you mentioned that it's a one product loan, not like two, not like um sorry, I knew they were going to call during this time, but it's just for one product. So it's one closing instead of two separate closings for that one, correct?
Right. It's a one-time close. Correct.
Okay.
And so basically they close in the beginning, and when everything's completed, they review everything, but it's only one time closing at the title company, you know, as far as the fees and things of that nature. But one thing that makes us stand out differently is we do conventional FHA, VA, and USDA products with our construction loans, which I don't know anybody
Really?
else that does that.
Okay.
Hmm.
So say for
And
this particular client, they live out in a rural area that's covered by the USDA. They could get a construction to perm loan for that particular build, correct?
correct, correct,
And it would be at 100% financing for that, and they possibly would have to pay closing costs on that.
correct.
Okay. And I was about to ask, so what do they have to have for you? They got to have their builder. They have to have, I guess their plans? What do they need to get to you in order to move forward with that?
Well, I would pre-approve them for a USDA loan, just like the standard loan product process, because we have to go through USDA for that product. But we do vet the builders. We do
Oh,
require the builder to be in good standing with credit. We do require tax returns from the builder, and that the builder has to have at least been in the business for 5 years. So we do vet them
okay.
just because we've been doing this since 1970.
Hmm.
And we know that it's important that you're using an experienced builder that, that does at least 5 houses a year, has been in the business for 5 years, and they're not, they're financially stable. You don't want them to get started and get so much halfway done and take the money and not finish your home. So, um, we do vet the builder. And usually
Okay.
if that's not a problem, you know,
Okay.
so
That's good to know because I do know new builders that's coming around that's they're real estate agents and they've been building a few homes and contracted with the city to also build some homes. But I was going to refer them to him, but he hasn't really been in business for 2 years yet, even though he's been building up his portfolio of homes. So they have to have that 5 years, and that's non-negotiable,
yes, I've had.
correct?
Yeah, correct. It is just because, that's just, you know, the owner of the company, that's how he has specified that that's important to him. But also, like I had one, he had been a plumber for like 15 years and now he just started building. And, we weren't able to move forward with him just because he had just started. Like he only had 2 houses built. So they want to make sure that somebody is financially stable. They have that extra fund set aside and they have the experience that's needed to make sure that, because they do provide, they do check out, they do provide references and they
Hmm.
do call and check out the builder too in that sense because they just want to make sure that they don't want the client left empty-handed, so that's why they are kind of the way they are about the situation, just because of
Yeah,
the experience that they've had doing these kind of construction loans for so long. They just find that that's more successful rate. And that the times that they have given in to the less, that's when the times that they've had problems.
yeah, yeah, I can see that. I've learned since I've been here in the Georgia area, you really have to vet your contractors and you have to stay on them because unfortunately people they have a habit of not finishing what they start, which I'm saying
Yes.
in a nice way. So
Yes.
you have to stay on them. Um,
Yeah.
just and I guess for me, I want to because we're going to come up on your time. I want to be cognizant of that. I don't want to take up too much. If there's is there something that I probably didn't ask you that you want to tell me about the company, so that I may not be missing something because I know they do a lot as far as trying to make sure they can, oh, sorry, get the people finance and so forth. I had another screen pop up in front of me by accident. But yeah, is there something you want to tell me that I might be missing out?
Yeah. Well, I just, as a mortgage lender and working with realtors, we do have a great mortgage app that I love to share with everybody. And
Okay.
it's co-branded with my realtors and they send it out to their clients. It keeps up with when every time they look at something, they can see when they're looking at something in the app. You can see, and they can go in the app and it's great for our clients too, because they can go in, put different information in and get a payment for a mortgage payment, and it can do an amortization schedule and all kinds of different graphs for them, which I find fascinating. But I think it's really good too because maybe we pre-approved somebody 6 months ago and they decided to hold off for a little bit. Then as soon as they go back in and start looking back at their app, then it notifies you and me to reach out to that client. So to
Oh,
me, I think that's always good to have as well. Because, we have those that sometimes, oh, something happened in their family and they're like, okay, are we just going to wait until this time passes before we,
right.
look at homes. So, things like that do happen. But then that kind of alerts us to know that, hey, they're interested again if you're not in front of them all the time. It's hard to kind of stay in front of them. So I think, that app is really good. I provide list reports to all my realtors too. It's really easy to make
Mm-hmm.
flyers and things like that nature. I think that it's a great tool. It also keeps up with clients that you're working with as well. So, as far as Union Home Mortgage, we've been in the business since 1970. We are growing. We're like the top growing company. We're in the top, I think, 25 as growing, the fastest growing. And we have recently took over another company out of Texas. So we are buying up companies as well. So
Okay.
that's always good to know that when you're in this situation, like you're talking about the volatile market that we're in, you as a lender, people were worried about losing their jobs, companies, not being here
Hmm.
anymore. Like Rocket Mortgage, they laid off 50% of their employees,
Wow.
things of that nature. So, that was beginning of last year, with everything that was happening with the interest rates. And so I feel like, Union Home Mortgage is a very solid company because we do service our loans as well. And so I feel like, we're not going anywhere. We've been through all this, over the years. And so I feel like our owners really, put their heart and soul in it. They listen to us. If we have if we're wanting to make some changes on something that we know will help our realtors or it will help our clients, they will listen to us and make those changes. So I think, having that behind you as a mortgage lender, it's really nice to know that you can trust your company and you're not worried about them going out of business and not being able to help your clients. And you can confirm that with your clients too. You can be positive with your clients too, knowing that we're going to be here for a while. So
Good, good.
that's a good
I
thing.
know you sent me the list report. I actually was on there with another mortgage officer, but I kept noticing it kept like deactivating me from something, and I saw him yesterday. And he was like, "Yeah, I said, "Oh, I actually switched over to another person because it wasn't going through right." So I listed you as my mortgage officer on there and signed up with you because where he is right now, they don't do list reports. So I'm thankful. I love going in there and being able to just share something that you got that they have listed in there. That is so helpful, especially when in our industry, we're also told we have to like post every day, and I hate posting. So I try to do something a little, this just makes my job a little easier. But I do want you to share that
Yes.
app with me so I can have it and also share with some other people I know. And that way we can kind of continue. But Shelly, thank you so much for jumping on my Zoom call today and participating. We will touch bases again so that I can get
Of
you on
course.
the Blessed in Boston one. But tell everybody I said hello and thank you.
Thank you for having me. I truly appreciate it. It's
You're
fun. We'll do
welcome.
this again.
We will. Bye bye.
Okay. Thank you.